All right, so we have Luke Alexander here from Newcore Gold. He's the CEO, and thanks for being with us, Luke.
Yeah, thanks for having me, Matt.
Sure. So tell us a little bit about yourself and your team.
So I'm the president and CEO of Newcore Gold. We're an advanced stage exploration project in Ghana, focused on discovering gold. In the last couple of years, we've drilled 90,000 meters, which is the largest ever drill program on the project, fundamentally underpinned by economic studies that we released in 2021, as well as a 1.4 million ounce resource. In terms of the team, I spent the first 15 years of my career on the investment banking side of the business, advising ASX, TSX, London-listed mining companies on different transactions around the world. I knew this Enchi project. It's a great project in Ghana, which is a tier 1 jurisdiction. That was the motivation for me to join the company. And we've got a great team involved. It's rare that you find a company of our size with a team with such a proven track record of making shareholders money. So advanced exploration in Ghana, focused on the gold sector, backed by an incredibly strong team with a proven track record would be the two-liner.
That's great. So because it has such a great track record in your team, so you're saying you have an above average team compared to other companies?
Yeah, in general, if you look at the board as well as the management team involved, we've worked in the mining sector for years. We've got a proven track record of making shareholders a lot of money with other companies that we've been involved with historically. And that's also allowed us to attract a lot of institutional capital to the company. If you look at our current shareholder register, we're about 40% institutionally owned. That's increased from 0 when I joined a couple of years ago, and our chairman, Doug Forrester, stepped up as chairman, and our VP exploration came back to relaunch the company. We've built that up to 40% institutional ownership. And these are really deep-pocketed, long-term focused mining investors who recognize the district scale opportunity that we've got at our Enchi project. So yes, the team, I think that really highlights what a team and what a project it is when you're able to attract that kind of institutional capital. The other piece I'd highlight is we are very well supported by the investment banking community. So out of Canada, we've got 5 tier 1 investment banks who currently cover us on the research side. They follow us from that perspective. And again, they can go and cover and follow any company out there. And they've chosen us as one of those companies, which again, I think speaks to the team and the project we've got at Newcore.
Sounds like you have a very experienced team compared to your market cap of other companies. What is your market cap?
Our market cap today in US dollars is about 25 million US. We've got about $6.5 million Canadian in the bank, so call it about $5 million US. So that basically is going to allow us to do a phase 2 drill program to build on the success that we had with our phase 1 drill program, which we completed in July of this year. So yeah, our market cap today is about 25 million US. If you look at some of the metrics on that and compare it to the economic study or the PEA that we put out last year, that outlined a project value of about $212 million at a $1,650 gold price. That gives you an after-tax NPV of about 42% with roughly a 2-year payback. So trading at $25 million relative to a $212 million project value at $1,650 gold, highlights some of the disconnect that we're seeing in the market today. We're not the only ones obviously suffering from that disconnect. The entire sector's been under significant pressure over the last year. The example I have been recently using is, you look at Newmont, the largest gold company out there, they're trading at, 50% below their 52-week highs. So these are the types of opportunities that I've seen throughout my career that investors are able to make a lot of money, is when you see these big disconnects in the market relative to the true project value that a company holds.
Right. Okay, well, that's great. Sounds like you have a great opportunity and that you've got some great numbers to attract. Our market on our website, our typical demographic is a little more public retail investors. So what can you say to the retail investor in more of an elevator pitch that says, hey, here's where the future lies? What kind of catalyst will drive the stock in the future, other than some of those numbers that you're talking about?
Yeah, so if you look at our market cap, I think we touched on that. Another way to look at it from a valuation perspective is we're trading at about $15 per ounce in the ground, which is another metric that lots of investors like to look at. In terms of elevator pitch, we just completed a 90,000 meter drill program. It's the largest ever drill program on the project. We really kind of took a multi-pronged approach with that. We wanted to go back to previously drill tested areas, continue to move those forward. We wanted to expand all of our existing resource areas so that we can grow our 1.4 million ounce resource to 2 million and to 3 to 5 million, hopefully at some stage. We also wanted to start testing the higher grade opportunity at depth. What you see with our project as well as other projects along the belt from us is that as you get deeper, you often find higher grades within that deeper drilling. So for the first time ever, we started to drill deeper on the project. And then we also made 3 new discoveries this year. So that really highlights the district scale opportunity that we've got at our project. So continuing to aggressively drill on the project and push the project forward is something that we'll continue to do, and we think will create significant shareholder value. At the end of this year, Q4 of 2022, we will look to get a resource update completed. That's going to encompass a huge amount of the drilling that we've done as part of that 90,000 meter program. And then we're also, doing a bunch of metallurgical work to see what kind of, extraction we can expect from the ore that we put through the heap leach pads, and so that's something that we're also doing as a bunch of met work. So, continuing to aggressively drill on the program, getting a resource out, really highlighting that fundamental underpinning of value that there is for the company. Those are the things that we expect will re-rate the stock once we see the market start to come back.
Okay, excellent. I think that is attractive to the average retail investor. And a broad picture, how many different properties do you have in terms of the company?
So we have one project. It's the Enchi project. It sits on the Sefwi-Bibiani belt in Ghana. So there's 2 prolific gold belts that run through Ghana. There's the Ashanti belt, and then there's the Sefwi-Bibiani belt. Historically, 200 million ounces of gold discovered in Ghana. It's the 6th largest gold producer globally, just behind Canada. It's the largest gold producer in Africa. So very good jurisdiction for us to have our project located. In terms of overall size, it's about 216 square kilometers, 40 kilometers from north to south. We've got 3 main shears that run through the belt, which ultimately, have about 100 kilometers of strike length. So from that perspective, it's a true district scale exploration opportunity.
So the concern I think some retail investors would have would be, what are the challenges in Ghana versus, typical American or Canadian company?
Yeah, so Ghana, the way I always like to answer that question is, first and foremost, don't listen to what I'm saying. As a single asset CEO with one project in Ghana, look at what the major mining companies are doing in country. You've currently got 3 of the top 10 largest gold producers operating in country. So you've got Newmont with significant operations, Anglo Gold, Goldfields. You've also got Shandong, Chinfeng. So you've got a number of major companies operating in Ghana. Looking at Newmont, for example, they're the largest gold producer on the planet. They currently have 14% of their global production coming from Ghana. They're in the process of investing another $800 million into the country. That's going to take them from 14 to 20% of their global production coming from Ghana. So I always say, if Newmont's going to have that kind of exposure to one country, my view is it's incredibly politically safe as well as from a security perspective. And you could imagine the size of the team you've got at Newmont who's analyzing, those different factors. And also they can deploy capital anywhere on the planet. They've got operations and opportunity to deploy capital anywhere, and they've chosen to pour more money into Ghana, given what a great jurisdiction it is to operate in. So tier 1 in my view, and that's just one small example that I'll use, but we could go on for the next half hour talking about all the reasons Ghana is a great jurisdiction. The other point I will make, and I did mention it is Africa's largest gold producer. So with that, we've got a huge amount of skilled labor in country. So we don't have any expats in country. It's all local Ghanaians, and these are Ghanaians who've worked all over Africa. It's an exporter of talent to other countries, given the expertise that lies there, and we're able to, have Ghanaians run all of our operations, which is, I think, critical in terms of pushing these projects forward in the most efficient way possible.
Yeah, it sounds like a good opportunity because there's well-developed resources and companies already there that have taken on the brunt, usually initially. Newmont's been there for how many years?
Oh, I don't know how many years, but it would be, I would say at least 40 years that they've been there. And there's been production coming from Ghana for 1,000 years. It's actually nicknamed the Gold Coast for a reason, because they've been finding gold there for 1,000 plus years. So there's a very rich history in country. The other thing I'd highlight is it's an extremely sought after job in country. I mean, there's 2 dedicated mining universities in country, and that's a population of roughly 30 million people, and it's a very sought after job in country. So again, it's one of the things we get to benefit from, but obviously Newmont and Goldfields and Anglo obviously benefit from that as well.
Excellent. Let's talk about more of like the future and where you see a potential exit strategy, potential partners that might purchase you, or maybe future proper rounds of funding.
Yeah, so with our 40% institutional ownership, again, these are deep-pocketed, long-term focused investors. They recognize the district scale opportunity and that it will require multiple rounds of funding, and have been very supportive of us continuing to push the project forward. We did close a $5 million capital raise in July of this year, and that, again, was very well supported by these institutional investors. One of the great things about our Enchi project is we've got a huge amount of flexibility. Because it's a heap leach project, we could bring 25 to 50,000 ounces of production in, and ultimately, push the project forward ourselves without, a huge amount of capex and dilution for the company. So that's one option, is we move it forward, take the cash flow from that, and aggressively continue to explore the district scale opportunity that there is. Another option is you look at the PEA that we outlined of 100,000 ounces of production, $212 million after-tax NPV. Rough capex for that is about $100 million, $97 million is what was outlined in the PEA that we put out in 2021. So that, that's the type of project that could be very attractive to a mid-cap who would want to buy that, put it into production, and then scale up to 150, 200,000 ounces, as well as continue to explore. Another option, a third option, is we continue to aggressively explore, and that's what we're doing at the moment. Build it to 3 to 5 million ounces, and at that stage, any large cap company or larger mid cap company would be interested in coming in and putting 200,000 ounces of production in with a full milling operation. So one of the great things we've got with our project is a huge amount of flexibility in terms of whether we build it ourselves, sell it, or continue to aggressively grow it to the point that it's attractive to any company on the planet. In terms of catalysts, I think was your other question, is we are just kicking off our phase 2 drill program, so we'll be getting drill results out from that towards the end of the year. The metallurgical work that I talked about earlier, we're in the process of finishing that work, so we'll get those results out to the market in the next month or so. And then, as I mentioned before, we've got a resource coming out in Q4 of this year, so we'll get that resource out to the market and look to kind of build off of the 1.4 million ounces that we've currently got.
Excellent. Well, I think you've got some great numbers, some great opportunities. Let's get into some concerns. What are some concerns that you have in the marketplace and things that may shift that would make it difficult for you, like the stock market drops, or gold and silver drops, or there's some problems in the country politically? What are your concerns that may?
Yeah, so I think you probably nailed it on the head in terms of the things that, would potentially be of concern for us are things that we ultimately can't control. What I always say is you can only control, your operations and how you move those forward. Obviously, you can control financing to a certain extent and some of those factors as well. So from an operational perspective, we've delivered on everything we said we would, and that's why we've had such strong support from our current shareholders and new shareholders who've recognized the value that we've created. Gold price, at the end of the day, if gold price falls to $1,400, we're going to fall the way any other company will. So that's something we can't control. And yes, it's something that obviously, we'd be nervous about. But in terms of the fundamentals of, I think, what will drive the gold price, I think we're setting up for a very good run in the gold price, which is, again, one of the reasons, I'm so keen on Newcore and the opportunity. Political risk, that's a risk anywhere in the world, whether it's in Canada, US, Australia, having someone come in and potentially block the project. Ghana is really pro-mining, so I don't see that as a big risk. Every time I meet with ministers and others in country, the first question is, when are you bringing this into production? How can we help you get it into production? So I don't foresee that as a big risk, but any mining project on the planet that's a potential risk. So yeah, those things that you can't control are always risks, but I think we've positioned ourselves in Ghana very favorably to mitigate those risks as much as possible.
Okay, great. That makes sense. So what do you think, what is your burn rate and your runway, assuming that stock price stays what it is right now for, let's say, a couple of years? So outside of gold price.
Yeah, so I outlined the economics of our project at a $1,650 gold price. So, $212 million after tax NPV. If you increase that to an $1,850 gold price, you look at an after tax of $300 million NPV. So very robust fundamentals for the project. If we drop to a $1,500, we've still got very strong economics for the project. So that's very favorable for us in terms of being able to navigate different gold price environments depending on where the gold price is at any point in time. In terms of cash burn was your other question. So management and directors of Newcore, we own 24% of the business, so we're truly aligned with shareholders from that perspective. So we ultimately see where we're going to create the value for shareholders is by aggressively drilling and moving the project forward. So as a result, we do not have a big cash burn. We've got about, $1.5 million, $1.75 million Canadian cash burn per year. So we can, push the project forward for another year and a half, depending on how much drilling we do. And the way we've always laid out our budgets and the way we have just recently with this phase 2 of drilling is we want to make sure we've got enough cash for a 12-month period, but we also, want to make sure we get as many meters into the ground as possible and push the project forward. So long-winded answer of saying we've got at least 12 to 18 months of runway. And again, very supportive institutional investors who, even in a very difficult market in July of this year, were keen to put more money in to see us push the project forward.
Excellent. Sounds like a decent runway. All right, well, let's wrap it up. Luke, any last comments you'd like to include?
No, I think we've kind of covered a nice array of different topics, and I think, in summary, Newcore Gold, it's a district exploration company in Ghana, fundamentally underpinned by very robust economics that we outlined within our PEA, a 1.4 million ounce resource, which will grow with the additional drilling that gets included in that Q4 update that we're putting out at the end of this year. Very strong support from deep-pocketed institutional investors, as well as investment banks who follow the company from a research perspective. And then you've got a management team who's truly aligned through our 24% interest in the business.
When is gold going to have its day?
Well, I think a lot of people have been expecting gold to have its day this year, and we saw a good run at the start of the year. I think with the strength that we've seen in the U.S. dollar and it hitting kind of 20, 30-year highs, in that environment, the fact that gold has stayed flat, I think is actually very encouraging. And as we start to see the U.S. dollar come off, which I think we will, as they start to taper on the pace of rate increases, that will ultimately lead to another very strong gold market.
Excellent. Well, Luke, thank you for your time.
Thank you very much, Matt.